This is our Forex blog for August 14th, 2014. I haven't been doing Forex blogs every day just because I'm focused on automated trading and creating our trading signals. I'll just showcase those first, and then we'll show how to use our currency indexes to trade. Here's the euro dollar yesterday and today. Nice sell, huge win, small loss, big win, pretty much break even. And then today, and the real secret to trading is just small losses, big wins. You can see the loss compared to the win. The win's much bigger than the risk. Here's what your risk was. Here's how much you made. Again, even on this trade right here, the profit was 1.5 to 1.7 times bigger than the risk. And then this trade right here didn't generate much profit, but it had more profit. I mean, at least it had a small profit. And then we'll just showcase a few other ones and then get on with the regular Forex blog video. Here's the pound dollar, and it did extremely well yesterday. Let me just get rid of this. It caught some of these big moves down, caught the low, wrote it up, sold here and sold here and sold here with 3 nice size wins. Bought the low, had a huge win here, and even picking these lows, which basically is just we have automated swing detection, automatic Fibonacci as a Fibonacci profit target level. And when the market's down this much, typically you get some kind of bounce off of there. And a lot of times trades that don't work, this is exactly what happens. It moves up enough that the stop moves pretty much to break even. And so it makes sense to take a small risk with the potential of 15 to 25, 30 pips. In this case, it didn't generate that, but a lot of times it does, and that's why we have very, very picky counter trend signals in here. Let's take a look at this one today. The trend's down, so we got to be very careful in selling. Small risk right here, very small profit. It sold this breakdown right here, which also didn't generate much profit. Sold right here, which pretty much led to break even. I mean, usually after big down days, the market's either going to go sideways or it might reverse up, and then we start buying dips. This is still down too much to really be buying, so unfortunately we have a few small wins and pretty much break evens. But today was not a bad day. It made more than a loss, so that's good. And here's the euro yen. Again, pretty much a choppy day. Sold right here with a very small profit, but bigger than the risk. Bought right here, very, very small profit. Sold right here with a pretty decent sized profit in comparison. Made about 15 plus pips, and we only risked 7. So it's 2 times bigger win than risk, and then a small win right here and a small win right here. There's about 605 patterns in here now, and I go through the signals each day when there are some losing trades, just to look at what the original signal looked like, and if it showed up today in a way that does not match the original one, I put in extra rules so that hopefully it doesn't have losses in the future. I have every single trade type documented with notes, and explaining and giving a picture of what the original trade looked like, so I can easily, and as you can see, there's 605 trades as I scroll through here. Just a ton of different trade types. Fibonacci retracements, fib targets, multi-swing fib retracements, multi-swing fib targets, and we use all the major areas of support resistance, trend lines, and so much more. Narrow range breakouts, and we use Fibonacci time and Fibonacci bar retracements to try to time when a pullback has had enough time. And if it's above a certain Fibonacci retracement level, we will get back into the original trend if a certain bar pattern happens. So it's very sophisticated. Most of our 600 plus signals have 15 to 35 different rules in each pattern. So that being said, you should use our Forex signals because I think they are absolutely amazing, and especially when combined with money management rules. If you use our currency indexes in your own analysis to decide whether to buy or sell, and you think there's a 60-70% chance of the market going up and you get a buy signal, bet bigger on those type of trades, and you will find that the signals work exceptionally well when combined with normal technical analysis on your own part when the signals align with what you're looking at. For instance, let's take a look at the euro today. Clearly started the day off in a downtrend. It's underneath the hourly moving average. That means all the euro-dollar pairs are pretty much down. You draw your fibs on the euro index, and again, this is an index, kind of like the S&P 500 of all the euro-dollar pairs. It makes a retracement up to the 38% retracement, right around the hourly moving average. The daily, weekly, monthly trend's down. This is a currency that's likely to go down. Now, at this particular time, the dollar is falling. It's underneath the lower containment band. Typically, price reverses when it gets above or below these bands. Usually within a half an hour to an hour. So it's very likely to get a bounce up in the dollar, and the euro is likely to go down. So you can see here at 525, if you look for a sell in the euro dollar, you're likely to get some kind of a profit. You notice our Forex signal, so let's find 525, it's right here. Continues up, continues up. We get a sell signal right here. The sell signal aligns with what the dollar's down way too much and it's likely to go up a little bit. The euro has made a retracement up, and it's in the zone of the 38 to 62% Fibonacci area where it's likely to resume its downtrend. And you can see that this trade is very likely to work. Let's find another trade here. Now the yen is the pound is super weak. It's at its lower band. The daily, weekly, monthly trend is down, so I wouldn't be buying that one. But you can see that the dollar has a weekly and a monthly trend. It's still up. It just happens to be falling right now. It's right near the previous day's low. So again, likely to find some support and get some kind of a bounce, enough to make a risk of selling the euro dollar worthwhile. Here you can see the Swiss. It's trending up. The New Zealand is strong, but it's also near its upper containment band, but it can kind of go sideways. If the New Zealand kind of goes sideways, none of the New Zealand pairs get stronger, but the euro starts to fall, you'll still make money selling the euro New Zealand. So let's just bring up a regular chart of the euro New Zealand, again coming up around 5 o'clock, and the euro is likely to go down and New Zealand's likely to go up. And as you can see, although the trade didn't really generate much profit, it did fall as predicted, allowing you to at least get out of the trade with a break even. The Australian is also in an uptrend, but it's not at its upper containment band. So if this resumes its uptrend, which it very is likely to do, and the euro does fall as it's likely to do, the euro Australian at 530 is likely to fall. And of course, this is a much better trade because one of the two pairs is not extended too much. You look for a sell right here, and you can see, your potential risk versus the potential reward. The reward is a little bit bigger, and it pretty much fell very quickly in your favor. You never know how much money you're going to make on a particular trade. However, using the currency indexes, you can line them up. Let's go a little bit farther into the future. Now, the euro is at its upper bands. Again, the longer term trend is still down. You might want to look for a currency that has a longer term uptrend, like the dollar, that is likely to maybe get a bounce there, and the euro is likely to fall. This is around 9.55. If you want to look for sells in the euro dollar at this point, it makes sense. Now, none of our signals generated a sell at 9.55. However, if you look at the chart, you can see it pretty much had a false breakout right here. So you could have manually gotten that trade here and made 5 to 8 times more profit than what your risk is. Super tiny risk, bigger win. So something to consider when you're trading. Use the currency indexes, and you can certainly, if you see a sell on the euro dollar and our signals generated, which these are not using our currency indexes. They're really too hard to analyze for a computer, but a human can spot the longer term trend, spot Fibonacci retracements, upper containment bands, and so forth. The dollar was down too much, the euro was up too much, the longer term trend of the euro was down, the longer term trend of the dollar was up, And so this was a very key, high probability place to get short. And of course, you made over 40, well, you would have made 35 to 40 pips while risking 7. And again, it only takes one trade like this. If every single trade you took the rest of the day was a loser, you can get it all back with one nice trade like this. So that's the beautiful part about trading. And you know, if you have a couple losing trades in a row, you can always start to trade a little bit larger. If you're a good trader, you can clean up a bunch of losses with one trade, even if it moves half this much. For instance, let's say you lost this much and then this much, and you wait and wait and wait, and you can see that the market, you know, has moved up, barely made a higher high, pulled back, barely made a higher high, comes underneath this level, and you don't know if it's really going to continue down until it breaks this little swing low, and then your next profit target's down here at this low. You don't know if it's going to break that. But let's say you lost 10 pips here and 10 pips here. Well, what if you traded one lot here and one lot here, you're down about $200. What if you do 2 lots right here, right? And you know, this thing pretty much goes straight down, but let's say you get out of the trade right here at 70. You made 30 pips with double your normal trade size. So that's equivalent of 60 pips minus 10, your net 40 pips up, while only being right 1 out of 3 times. So that's the beautiful part about trading. It's what professional traders that, you know, are very in tune with the markets and know what their win-loss rates are, and they know that very rarely are they wrong 3 times in a row. Or, you know, if they are down a little bit, they wait and wait and wait for the perfect opportunity before pouncing and trading bigger lots and cleaning up all of their losses in one fell swoop, plus ending the day with a very, you know, big win. If you lost 10, 10, and then you make 30 on double your normal trade size, which is equivalent to 60 pips, you had a 40 pip net day. I mean, that's phenomenal. And just one currency too.